What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about Magnificent 7. So we're going to be doing our full-blown data-driven analysis on Magnificent 7 stocks. You're not going to want to miss this one. So definitely do me a favor and share this video with other investors and traders who can really benefit from the analysis. Absolutely mind-blowing analysis that I'm about to share with all of you, because as you guys know, I did a video on this yesterday, but that was more aggregated index, S&P 500. That's what we analyzed. And one of our subscribers, shout out to him, essentially mentioned, damn bro, this is interesting data. Thanks for that. Maybe consider doing this with certain stocks like the Mag 7 that have been around a long time getting some historical returns. And I said that yes, I am indeed working on it. And that is this video, which you can essentially take a look at for Magnificent 7. I also want to mention that out of all the people that are watching my content for MoneyVest, only 73% are subscribed. Almost 27% of you guys are not subscribing. So I would really appreciate two things from you. If you're enjoying these videos and getting a lot of value, please make sure that you subscribe and also share this video with other family, friends, traders, investors in Discord groups, WhatsApp channels, Telegram, Facebook, Instagram. Just blow it up so that we can actually get more and more people in the community and have more lively discussions. So without further ado, let's get started. We are going to spend a lot of time on this spreadsheet. I spent a lot of hours working on it, so I'm super excited to share what this essentially is telling us. What is the data telling us for Magnificent 7? So a couple things right off the bat that I want to share here is that this is a price-weighted index that I have created myself on TradingView. So what I did here is that if you come over to TradingView, this is my actual TradingView dashboard, and you can see that this is the index that I have created on TradingView personally. So this is including for Apple, Amazon, Tesla, Nvidia, Meta, Google, and Microsoft. So that is those 7 companies, right? 7 stocks, Magnificent 7 as we like to call them. So this is the index, which is price weighted, trading at 1,767.73 from its all-time highs of well over 2,034. As you can see, that's the all-time high. This particular index, which tracks the Magnificent 7, is currently down a little bit over 13% from its all-time highs, thereby in a correction, right? Because it's down over 10%, it is in a correction. Now, what TradingView allows me to do is that essentially export all the prices and quotes from as long as this index has been around. So what I do here is if I come over here, I can export the chart data in a nice CSV file, and then I take that CSV file to essentially extrapolate a lot of different types of analysis, which I'm going to go over in this video. So those are some things that I really want to get across first, just so you have an idea and understanding of what we're working with. So we've got the date. We're going back as far as 2014. So in the case of S&P 500, and I went back over 51 years. But in the case of Magnificent 7, I'm only going back 2014 because that's how much data is available. We're going back just over 10 years worth of data. We've got the date, open, high, low, close, the all-time high, the respective all-time highs every time we've hit the all-time high, and then how much are we lower from that all-time high, and then the percentage change, of course, compared to the all-time high. How much are we down from all-time highs? As you'll notice that right now, 14.86%, and this is accounting for the low price, the most recent low price versus the all-time high. If you compare it to the actual closing price, that of course is 13.11%. As I showed you earlier, if you come back and take a look at from all-time highs down to where the price closed, 13.11%. That's exactly correct with the TradingView. But then if you compare it to the lowest price, which we hit on Friday, all the way down here, which was closer to 1,732, that is over 14.8, almost 15%. And that's the number you see over here. That's 14.86. That's accounting for the low price compared to the all-time high. And this right here, 13.11, is the closing price compared to the all-time high. So either way, we're down 13 to 15% from all-time highs, thereby putting us in a correction. Okay. So we got lots of data on our hands, lots of analysis that we can do, similar to what we analyzed for S&P 500 yesterday. So the current drawdown based on the lowest point on Friday, almost 15%. So we're analyzing over 2,606 days worth of data. So that is just over 10.3 years. As I mentioned, we're going back 2014. So that's over 10 years. And all-time highs of those 2,606 days, this index, Magnificent 7, has hit new all-time highs for 331 days. So that is just over 1.3 trading days that we have just been hitting all-time highs. Now, if you consider how many times have we experienced a dip during those 10 years, 1,205 days we've experienced a dip in Magnificent 7, meaning the index is down between 0 and 5%. That's happened 1,205 days, or just under 5 years. So that is 46%. So 46% of the times, which is almost half the time, this Magnificent 7 index has been trading within 5% of its all-time highs. When it comes to a pullback, right, down between 5 and 10%, we have spent 568 days for this Magnificent 7 index between 5 and 10% down from all-time highs. That is just over 2.2 years, or 21%. Said another way, because this right here is the cumulative that we're keeping track of. So this is the cumulative, and this is the time spent on a percentage basis. So when you look at the cumulative, that is 68%. So that basically tells us that 68% of the times in the last 10.3 years, Magnificent 7 stocks have spent within 10% of their all-time highs. This is majority here. Now, when it comes to a pullback down 10 to 20%, this is where we are right now. This is the current trend, because we are down over 14, almost 15% from all-time highs if you consider the low point. So this is where we are. This is the current structure of the Magnificent 7, down over 10%, but still less than 20%. That's happened 433 times in the last 10 years for this index, or just under 1.75 years. 16% of the times we've spent here between 10 and 20% down from all-time highs, and 84% of the times we have been under 20% from all-time highs. So where we are right now is where we have spent 84% of the times in the last 10 plus years. Now, I've marked out rare, rarer, and rarest conditions of this Magnificent 7, meaning that once these thresholds get breached, once this Magnificent 7 index, for example, is down even more, we are going to start breaching some very, very rare conditions on this index compared to the last 10 plus years of historical data. So what that means is that if we enter a bear market, if, for example, next week or in the next few weeks, this Magnificent 7 stock index continues to sell off and we're down, let's say, over 20% from all-time highs, we would enter a bear market, right? And we've been in a bear market between 20 and 30%, 154 days, or that is just over half a year. A 30 to 40% breach, 146 days we have spent between being down over 30 to 40% from all-time highs, just over half a year. 40 to 50%, which is another bear market. So we've segregated these bear markets into three categories: 20 to 30%, 30 to 40%, and 40 to 50%. That is 82 days. So you can see that the lower we go, right, the lower this index goes, the fewer days are spent at those prices, because it is indeed a rare occurrence. It is a rare event for the index, for this Magnificent 7 index, which makes up for the 7 top companies in the world, to be down 30, 40, 50%. Right? So the lower we go, the more rare it becomes for this index. And a crash, which is over 50% from all-time highs, this Magnificent 7 index to be down over 50% from all-time highs, we've only spent 17 days. 17 days, and all those 17 days occurred in 2022. I'm going to break down all of that in more detail in just a minute, but 17 days this index has spent over 50% down from its all-time highs. That is practically less than 1% of the time spent, and that is going to be the rarest of all events for this Magnificent 7 index. So the bottom line is that we are right now in the current territory, which is down over 13 to 14% from all-time highs. 84% of the times Magnificent 7 is down over 10%, but less than 20% from its all-time highs. So we are very much in a majority here. But the moment it breaches over 20% threshold, that's when we're going to start entering a very rare and a rarer and a rarest condition for Magnificent 7. So we got to really, really pay attention to where this index is, so that can help us, allow us to trade these individual stocks, accumulate these individual stocks, or even trade levered ETFs that are corresponding to this Magnificent 7, right? So for example, one of the indexes that I'm watching very closely with this analysis is FNGU, right? FNGU is essentially Magnificent 7, but a little bit more levered, right? So you'll notice that it is also down quite aggressively. It's down a little bit over 39, almost 40%, because it's 3 times levered against the Magnificent 7 stocks. So the moment Magnificent 7 companies, which is the index that I showed you earlier, this index is down a little bit over 20%, I can get a better idea that, okay, this is now entering a very rare environment for Magnificent 7 companies to be down collectively over 20%. And the lower it goes, the more rare it becomes. And that's when I will start to increase my dollar cost averaging, my aggressiveness in Magnificent 7 and levered ETFs, including individual stocks. So there's a lot that you can do with this type of analysis and this data. So the max drawdown we have seen in the last 10 years for this index has been over 54%. The max drawdown occurred on January 6th. January 6th, 2023 was the time when we witnessed the max drawdown for this particular index. And this was right over here. This was the bear market of 2022. As you can see, this entire index deflated quite aggressively. You can see it was down over 54%. And that's the max drawdown you see over here. That's how much it's been down on max ever in the last 10 years. And we essentially triggered that on January 6th. So if you come down and pinpoint that particular number, so that's going to be right over this candle, as you can see, January 6th, the date is going to be all the way at the bottom. So that right there is going to be that date. You can see January 6th, 2023, the lowest point was $749. So this right here was the candle, which was in the last 10 years, the max drawdown we've seen for this Magnificent 7 index happened on January 6th. The compounded annual growth rate, so in the last 10 plus years, annualized, this index has given us a return of over 25%. 25% every single year this index has given us over the last 10 plus years, which again is a fantastic 3 times more than the S&P 500. And the total return has been 9,339%. So this right here is the total return for this index over the last 10 plus years of almost 1,000%, considering how much progress we've seen across the board for these companies. And the average drawdown in the last 10 plus years has been over 10%. We're just over 10% right now. So the average drawdown 10%, median drawdown a little bit over 5.5%. But the interesting thing is that if you account for the times when the Magnificent 7 index does not enter a correction, does not go down more than 10%, that's when the average and the median is low, right? That's when the average drawdown is only 10%, the median drawdown is only 5.5%. But the moment this Magnificent 7 index drops more than 10% from its all-time highs, i.e. in a correction, that's what we're in now, the average drawdown accelerates to 23%. 23% with a median drawdown of over 19%. So we can theoretically, statistically speaking, expect this Magnificent 7 index to be down even more, somewhere between 19 and 23% on a median on average basis, respectively, in the coming weeks, because that's been the historical trend, considering that once we enter a correction, the average and the median drawdown is between 19 and 23%. So that is something to keep in mind. And the longest crash of over 50% has lasted over 24 days. Lasted over 24 days. Actually, this should be 17 days, I believe. So 17 days should be that number. That is going to be between... actually, I got to check this data. Just give me 1 second while I do that, because if you come over to this sheet... so once we are down... So this is 17 days. That's been the largest crash. Yep, so that is 17 days lasted from, let's come back, and what we're going to do is we're going to select for a specific cell color. We're going to come over to, was it black or was it more colors? Let's just go to green. That is over 40%. There we go. So I've actually included for 40 and 50 here. So that actually started on December 20th, 2022, and lasted all the way till January 13th, 2023. So that is going to be that number for over what is that? 17 days. Yep, so 17 days, that's going to be that number. So largest crash lasted for over 17 days. And these were the dates. That's the trading days between December 20th, 2022 and January 13th, 2023. That was the 17 days when this index was down over 50%. Longest deep bear market of over 40%. So Magnificent 7 index being down over 40% has lasted over 99 days. And that was during this time period, also including for the 2022 bear market. And the longest bear market, when it's down over 20% from its all-time highs, 446 days. So it has spent down over 20% from its all-time highs. Of course, it kind of fluctuated a little bit in those 446 days. It wasn't like it never got back to within 20% of all-time highs. Of course it did, but it really just dropped back down to below 20%. So I've kind of accounted for a point in time, those 446 days, when it did fluctuate a little bit, came down to a crash, came down to a deeper bear market, and then went back up to within 20%, then came back down to over 20%. So it kind of fluctuated in between those levels until after October 31st, 2023, when it was for good within 20% and then ripped to all-time highs. So 446 days is the number in terms of days of how much time it spent, this Magnificent 7 index, down over 20% from its all-time highs. And then other bear markets have accounted for. This was during the COVID. This was during the COVID crash. This was during the geopolitical risk and also the trade wars between U.S. and China back in 2018. 63 days. This was 22 days, and this was the longest bear market of 446 days, is what I've also noted in this analysis. So let me know your thoughts down in the comment section below. From what I understand, from what my analysis tells me, that this Magnificent 7 index, on average, on median, has the potential to be down over 19 to 20% from all-time highs. If this selling pressure accelerates to the downside, that is how much we can expect it to be down on median and on an average basis. But the moment it cracks above 20%, we are going to be entering this sort of range where 90% of the times this index has spent within 30% down from its all-time high. So that is, again, entering a rare condition for this particular index, and the lower it goes, the rarer it becomes, the more interestingly rare it becomes for us to take advantage. Dollar cost average, be a little bit more aggressive, whether it be individual stocks, be ETFs, levered ETFs, calls, puts, whatever it is that you want to do. There's definitely going to be plenty of opportunities in these Magnificent 7 stocks as they continue to sell off. So hope you all enjoyed this video. I spent a lot of time on this. Hopefully this was helpful. And again, this right here is a nice little sheet showing you the different thresholds for when they were breached from all-time highs. So in other words, when the Magnificent 7 was down over 10%, 20%, 30%, 40%, 50%. So you can see that these are only 17 instances when this index was down over 50%. Over 40%, we've had over 82 instances for this particular drawdown. And then of course, if you come over to over 10% down, 433 times we've seen this, over 20% down, 154 times, and then this right here, 146 times, over 30% down. So these are all the thresholds that I've also marked out for all of you. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Really appreciate you guys. Make sure that you do share this video with other family, friends, traders, investors, people who can benefit from this type of data. And as always, happy investing. I'll see you all in the next video.